Good morning, good morning, good morning, good morning, good morning. My name is Sean Jackson and welcome you back for your daily Bitcoin analysis video. All right, I'm actually really unwell today. I woke up with a terrible fever and a bad throat, so I do apologize if I sound a bit raspy in my voice. I'm going to try to get through this analysis because today it's a bit of an important video. I do want to clarify a few things. In yesterday's video, we wrapped up with a discussion on the FOMC meeting coming up in a day now. And I want to make sure that you guys understand how to play around this. And if you guys haven't watched yesterday's video, I do recommend watching it. It is a comprehensive analysis and a quick one at that too on the weekly, the bi-weekly, the monthly and the 3-month. It gives you a really good summary of the key levels to watch and how to avoid analysis paralysis. We also talked about the implications on Dixie in regards to the FOMC. But with that being said, the FOMC now, we are having our next FOMC meeting in only a day and 11 hours. And this one is a tad bit of a complicated one. Usually I just tell you guys, hey, listen, don't even bother with it. This time around, I think many of you are going to be tempted to trade around this because it's going to be the first time that the Fed cuts rates in years now, right? So what's the market saying? The market is saying that there's a 67% probability that we get a 50 basis points rate cut. Now, I want you guys to promise me that you do not try trading on this. I do not want you guys to go ahead and put on bullish positions because you think that the Fed is going to be cutting 50 basis points. And on the flip side, I don't want you guys betting that the Fed doesn't cut 50 basis points and cuts only 25 basis points. Do not trade this event, guys. Do not trade this event. Because even if you are right on what the Fed does, you also have to be right on how the market interprets what the Fed does. For example, if the Fed cuts 50 basis points, you guys might say, hey, that's bullish, right? Rates are coming down. But on the flip side, there's a huge cohort of bears who will say, hey, it's 50 basis points rate cut. That is so bearish. It means that we are going into a recession. It means that the Fed knows something that we don't. They have data ahead of us, blah, blah, blah. You don't know how this is going to be interpreted. What's going to matter is which cohort is stronger, right? Are there more bulls on the 50 basis points rate cut or are there more bears on the 50 basis points rate cut, right? You don't know that. So you have to be right on both. You have to be right on what J-Pow actually does and you're going to have to be right on how the market interprets what J-Pow does. There's a bullish and a bearish narrative for both scenarios. What we need to figure out is how the market interprets the actual rate cut, whether it be 50 basis points or whether it be 25 basis points, okay? We don't care what the Fed does at this point. The rate cutting cycle has begun, right? Regardless of these two options. What matters is, does the market think that this rate cutting cycle is bearish or does the market think it's bullish? And how do we figure that out? Through the charts. How the charts react, not in the next day or 2 days, guys. There's going to be volatility. There's going to be a lot of battling, a lot of skirmishes going on. When the dust settles, we will have a clear picture. So I'm going to ask you guys, just wait around 4 days, wait a week, wait 2 weeks, okay? Maximum 2 weeks, and we will have a really good picture as to what the market thinks about the Fed's decision. That's all I'm asking you guys to do. Wait. Don't trade this event, okay? So what are we going to be looking for the market to do for a bullish posturing or for a bullish interpretation of what the Fed does, regardless of whether it's a 25 basis points or a 50 basis points cut? We're going to start with the 4-day time frame. We just closed a 4-day candle, and this picture over here, I wouldn't say it is all that bad, but it isn't all that good either because we have lower highs and lower lows, okay? Right over here, I have a horizontal coming in at around 59,809. If we go ahead and turn on our Ichimoku on the 4-day time frame, we can see that we are currently threatening a bearish TK cross. But if we can clear the Tenkin right over here, which is also lining up at the top of the cloud, coming in a few weeks, that is going to be a really good sign. That's going to be the first step. Okay, we want to see price close multiple 4-day candles and live above the Tenkin. That will set up a really nice picture where we could be putting in a W-like formation and breaking towards the upside. Okay, so that's going to be the first step. We've not done that yet, so we can't get ahead of ourselves. But let's say the Fed cuts 25 or 50 and the market starts closing multiple 4-day candles into this region and drifting up. We know how the market is interpreting the rate cut, right? Regardless of whether it's 50 or 25. Wait for price action. Don't bet on this event. Okay, that's the 4-day time frame. You guys can look at the Ichimoku to get a clear picture. What we want to avoid is a bearish TK cross, then break the. Okay, let me just go ahead and draw out the bearish picture for you guys. We drew out the bullish picture, right, which is essentially this, right? What's the bearish picture? The bearish picture is us breaking down into the cloud, getting the bearish TK cross where we see the Kijun cross over the Tenkin, and then we have our edge-to-edge trade to the bottom of the cloud, somewhere around 47,000 to 49,000. All right, we could essentially see a wick into 46,900 and a close above 49,000, and then we look for a trade back to the top. Again, we're getting ahead of ourselves at the moment. The bulls have the edge over here because we're still living above the cloud and we just reclaimed it, but we want to see the Tenkin get claimed on the 4-day time frame. All right, next important chart is the biweekly. We've been talking about this for years now. As long as we're living above the biweekly dynamic, you can have a bullish posturing for your cyclical positions. As soon as you start closing biweekly candles underneath the biweekly dynamic, we are in trouble land and we need to start positioning for a bearish move until we reclaim the biweekly dynamic again. As of now, we are still closing above. Last biweekly, we threatened to close underneath, but the bulls stepped in, closed above it. So a good sign at the moment. As you guys, if we zoom in, right, if we zoom in, you guys will see that we are oscillating between the top of the biweekly and the bottom of the biweekly. Closing above the top of the biweekly would be a good sign, but it's not all that important. We want to start seeing candle closes above like 60,905, and then after that 64,000. But for now, we're still holding. Okay, we're still holding. So it's too early to get bearish on this. So for the biweekly, we want to just see this hold and drift to the upside as well. The 4-day is a clear picture in that regard if you're looking for something a bit more sensitive, okay? But if you're looking for how to be defensive, you start getting defensive and scaling out when we start losing the bi-weekly. If you're looking for something where you want to say, hey, when can I start getting aggressive? You're looking for a close above the Tenkin to say, hey, get ready. And then above the neckline right over here, guys, of the potential W-like formation at 64,146, okay? So your bi-weekly is your defensive chart. Your 4-day you can use as your aggressive chart. Now, another defensive chart, very, very, very important, is your monthly time frame. Okay, again, we've been talking about this just as much as the bi-weekly. You can use your 10 SMA, which, by the way, is closing in 2 weeks. Okay, the month is closing in 2 weeks. If we close underneath the 10 SMA, it is again a very, very bad sign, and you have to start posturing for a move down to the bottom of the monthly dynamic, again coming in at $47,000. So there's a lot pointing to a move to around $47,000. We have the 4-day, if we do get the bearish TK cross, and the edge to edge to the bottom coming in a wick at around 46,700, close above 49,000 is what the 4-day is saying. And then even over here, if the monthly closes badly, we are looking towards the same move around 47,800, right? So yeah, monthly looking for the 10 SMA to hold, but a really good close if you are looking for the aggressive posturing, right, is going to be a close above 60,700. Okay, in the next 2 weeks, when the dust settles, the FOMC is over and done with, all the bulls and the bears are finished battling as to whether or not it's a bullish move or a bearish move. Once the dust settles, we want to see the month of October open above 60,700. That would be a good look. Honestly, the best look, of course, is going to be close above 64,000 on the monthly. We have 2 weeks. It could happen. Imagine a green candle close above 64,000, guys. 64,800. Amazing, amazing, right? But let's not get ahead of ourselves. I wouldn't discount that, though. I wouldn't discount that because on the 4-day, it does look like we're not too far away, right, from 64,000, right? We could just see the W start shaping up, a close above 64,000, 65,000 or somewhere around there, and then suddenly, your monthly candle, guys, closes all the way up around here. Now imagine a big freaking green candle like this. I'm trying to draw it. But yeah, imagine a green candle as opposed to a red candle. That's going to change the look of the chart, right? So start thinking ahead as to how the candle could look, but also think about how the candle could look if it's red. That's going to look ugly as well. So we are at a pivotal point. Finally, I do want to wrap up with this chart right over here. This is the 6 month, this is TED chart. We'll talk about this in the live stream. I have a few things to talk about over here, but I want to go on over to the 3 month chart right over here. We talked about this yesterday, right? Go ahead and watch yesterday's video. I do urge you guys to do so. But the key level that we want to watch is this level right over here. We want to see the 3 month close above 58,600-ish. We're testing it at the moment. It seems like the bulls and bears are battling to defend that level. That seems to be the battle. We are closing the 3 month chart in 13 days and 18 hours. So this next 2 weeks, guys, it's going to be so important, so important. If we lose that level again, where do we look towards? This horizontal right over here, which is lining up to 47,000 as well. A lot of confluence at 47,000. That being said, even if we do come down there, it's not the end of the world. We are likely going to see a bounce at that point. But do we put in a lower high at that point, something like this? Or do we put in a higher high, right? Essentially, can we defend the higher low is the big question. If we put in a lower high and then come back down, then we are threatening this trend line right over here at around 34,000. If we lose this trend line, holy shit, that's going to be a very bad look. And you guys don't even want to, we don't even want to go there. We don't even want to go there. But that's the bearish side of the chart, right? The bullish side is that, hey, we have a really, really strong macro trend line that is likely going to hold for years to come. The trend is your friend until the trend ends, and the trend is still holding strong. And at the moment, we do have horizontal massive support over here too at 58,000 that the bulls are defending. So this is what you guys need to be watching out for over the next 14 days. Please do not bet on what you think the Fed is going to do, because even if you are right on what the Fed actually does, you need to be right on how the market interprets it, and you don't know how the market is going to interpret it. All you have to do is wait, be mango, be easy, be stress free. Watch the 4-day, okay? You're looking for the 4-day to close above the Tenkin, 59,500. Bi-weekly, just look for the bi-weekly to defend itself, and that's coming at 54,200. Monthly, 10 SMA, of course, and close about 60,700. It's going to be great. All right, with that, I hope you guys enjoyed this video. My throat is burning. Keep it mango, keep it easy, keep it stress-free. I'll see you guys in our Discord at themango.com/Discord. Ciao.